So yeah, it will just guide you guys along as we're going through, and then we can take it from there. Thanks. Ed, remember to record when we get going. Okay.
Yes, already sorted.
Okay, super. Thank you. Hello, Ed. Can you guys hear us on the online? Okay, so besides what
Yes,
we
we can.
us here, there's about 60 or so people online as part of the talk. So we're busy tracking both on and off, so it's quite an exercise. Perfect. So what we want to do, uh, sorry, we're having some technical issues this morning. Just give me a second. For some reason, okay, should pick it up now. Yeah, so today we're going to just recap. We've covered a lot of ground over the years so far. Um, so the screen will just start now. There we go. So we're going to cover a lot of ground. I mean, this year started out, how do you register a business? What do you do with the business? What regulatory stuff you have to, I guess, you apply for, like bank page, UIF, shareholders agreements. We discussed cash flows, income tax. I mean, the journey since February till March roughly has been quite a long one. And like, I think you feel like we do that in December can't come fast enough. However, we thought we'll just do a recap of a lot of these things that people have asked and might have missed along the year so far. But what we do is we actually record all of these. So the team online are recording all these sessions, and they do get posted on our website. And if you go to the website, I should actually have it up here, but I'll do it at the end of the talk, so I don't want to mess with the clicker that's giving us gears. At the end of the talk, I'll just go onto our website and show you. We've got blogs, because a lot of the stuff we speak about, we write a blog. There's a simple one-page blog explaining everything. And then obviously all these talks are recorded, and they then are posted on our website. They go through to our YouTube channel, and you guys can go watch them any time. So a lot of the things we're going to talk about refer to the talks we've already had. Yeah, perfect. And I think this is the wrong one. Yeah, might have been, but hold on. No, that's fine. Don't worry, I'll make it work. So the first one we're looking at is partnering with us with digital marketing. So we have a team that works as part of us. I'll just go to the beginning. So Decasatio, and they have done some social media work with a number of the actual participants on our and the Dr. SME program. So some of the participants, you're doing some social media? Okay, perfect. So for people who want to partner with us, we can set you up with the Hector Social. You can ask them questions. If it's something like how we normally operate, if it's just answering something like a question, we generally do it for free because we want to help. Where it requires work, where we actually have to go do market research for you or build websites, those things they'll obviously quote you for and then take it forward from there. But also look at the blogs. You will find we've done blogs on these items. Okay. On it, Mark and Nay might be able to just put together. Maybe we can share it with everyone in the sensitive days ahead with what other services they offer. Then it'll make life a lot easier to understand how we can partner. One of the other questions we are having is e-filing. Generally, what we find is most of our clients, although they have an e-filing profile, they themselves don't do the e-filing. So they're not really submitting their own tax returns, submitting their own VAT and things like that. So we'll normally handle this on behalf of our clients. But SARS does have videos, it is some online stuff if someone wants to do it themselves. The problem is, mostly at SARS, it's not as obvious as they think it is because the website's not built for users, like general sort of people using the site. It's built for SARS, essentially, and then us and accountants. And even we actually struggle on some of the things where it worked yesterday, snail will know, and then this morning it doesn't work. And no one knows why. So we can go through all those. So on e-filing, you do everything. You normally, once you register a company as SIPC, you receive an income tax number, and that's the starting point. You then go from there and you, once you've got your income tax number, you can start to register for pay as you earn. You can register for workman's, or not workman's comp on there, but you can activate your SDL, your skills and development, your UIF. Although you register at Department of Labour for UIF, you link it to your actual pay as you earn on e-filing, and you submit it through on that. Okay, cool. And then obviously from there you'll do your income tax, so your RP6s. That'll happen twice a year. RP6 1 in August, RP6 2 in February the following year, and then your tax return, your RT14. Or your own tax return if you're an individual, which you should be doing, which will also be in RT12. And that all gets done through e-filing. So pretty much everything to do with SARS, import, export, anything that you need to link with SARS will be on e-filing. I have to give them credit. It is easier than it used to be. I'm old enough to have done it all with paper. Back in the day, you would stand in the queue and you would hand it all in, then they'd lose it, then you'd go back and keep doing it, and then they'd lose it again. They still use it online though, so, but you're not standing in a queue, so you can do it like a few at a time. You're not wasting as much time as you did in the past. Okay, cool. One other question, when should I register for US? This is generally what we covered in our first talk, our February, March talk, the things to know about the business. So UIF is the minute you employ a person and they work more than 21 hours a month. I mean, that's like hardly any hours. If you break it out over the year, I mean, over the month, it's like 1 hour a day. 21 hours a month. Then you're going to register someone for UIF, irrespective of what you're paying them. So that's when you do it. You don't do it on e-filing. You do it at a Department of Labour because UIF doesn't necessarily mean you pay as you earn. So if you're under the threshold of 7,000 Rand roughly a month, you're not paying pay as you earn. It'll only be UIF, and that you pay across to the Department of Labour every month on a UR19 form. Okay. But remember now, because our last talk was the actual benefits. If you are having to register for UIF, check ETR. Because if you're employing someone, there's a tax break from SARS that you get a tax break from them for actually employing a person. And that salary range is anything from 1.5 up to about 4,000, but can fix up to 6,000 Rand a month. So there is some ETR in there, and it can range roughly about 1,500 Rand back that you get from SARS every month. So just think about those. It isn't the talk we did last month. Okay. Other registrations, yeah, so there are quite a few. It normally starts with income tax. That's the first one. The next one will be UIF. So if you do UIF, you will do workman's compensation. That's like an insurance in case any of the staff get injured. You can take them to hospital. You're not paying for it. The actual workman's comp actually pays for it. So it's a very good thing, and you have to have it. And then from there, it goes pay as you earn once you hit the threshold. That once you actually hit the threshold, and you move forward from there. Okay, so those, we do have those blogs. We have done this, that's normally our most popular talk. The things you should have been told about running a business but weren't. It works really well. Okay, so tax clearance, the bane of our lives as a SME. You know, it was easier even a year ago, 2 years ago, when you got a tax clearance and it was valid for 1 year. Now you can get a tax clearance and you can be valid now, and on the 7th you're late. Now you didn't do your pay as you earn now on the 7th on Monday. and now you're not valid. Just like that. Whereas in the past you had one that said valid for 1 year. So what you'll do is on e-filing, generally you're an accounting officer or yourself, there is on there you just apply for tax clearance and it tells you straight away if you have it or not. So they'll give you the PIN, but if you go into and you go in, it'll tell you whether it's like active, whether you actually are compliant or if you owe SARS money. So the tax clearance now that you get with the PIN doesn't mean that you actually, like everything's good. It just means someone can go have a look at your profile. Okay, so just be aware of those type of things. Same procedure, and it will be the same. So if you do your tax clearance in your personal name, it will be the same thing under your personal tax profile. Okay. Just the questions I'm going through here, you would have all received the mail, in case anyone here is wondering why we just got random sort of stuff on the screen. We went out to all the attendees who've actually attended our talk since Feb and asked what they want to know, what they need a recap on. So these are the few items that came through that people asked for. Okay, and we've learned from experience, if one person in the room is thinking it, about half of us are probably thinking it too. So that's how we're going through these elements. You know? Okay, yeah. So if you're a normal taxpayer, then you become a provisional taxpayer. Okay, that's quite an important one. We find that there are employees, so you're working at a company, and you obviously you're paying pay as you earn, you've got an income tax number, you file your personal taxes, and you think that's good. Now you start a side gig. Now you're earning other income. It might be a rental property, it could be anything, sponsorship on the side, whatever. The minute you get other income that's not part of your sort of day-to-day earnings like at a job, you have to register for provisional tax. Or if you register a company and you now potentially going to get income as an owner of a company, then you have to register. So those, and SARS won't actually tell you, they don't pick it up. You've got to go in on your profile and change it. Okay, so unfortunately some people do get caught out with that, so it's a good thing to ask. They were working at a company, they leave, start their own business, and now they only file their taxes at the end of the tax year, they would normally do, and then SARS comes back, they pick up that maybe they tick on the box, I own a company now, and then SARS says, no, hold on, you should have done something there in August, and they charge you interest, plus interest, which becomes expensive. Yeah, so that answers please, eh? Perfect. Is it possible to register as an importer? So SARS tries to link everything, it's like a spider's web. And no, you have to, I want to clarify this, but the normal sense, to register for import-export, you have to be VAT registered. And why that is that import, you pay import fees, import duties, and you can claim those. So it's not just a case of the VAT on the import. The import duties are also a tax. So you can claim those, and only way you claim that is through your VAT return. So if you don't register, you don't get to claim those items. I mean, it's a different story. I mean, you can go onto Amazon and you can order laptops nice and cheap on Amazon for Black Friday coming up, and they'll come through. Amazon will pay it, you get your invoice, you'll see on your invoice, customs, excise, and you can sell them locally. Fine, you've imported them, but not officially imported them, and you're selling them. But now you've had to build that cost into your selling price. So it does check. It's about 50,000 rand a year of electronic imports, electronic stuff. So they might pick it up. So generally, if you're going to be doing in the business of importing stuff, they will, I think, on the form, and you do it on e-filing now, to do import your import-export registration, and you have to be VAT registered. Okay, it's for that reason, because if you're exporting, your VAT that you charge is zero. But what that does, I mean, it's not exempt. This is a different thing. Exempt means you aren't allowed to charge VAT, which means you can't claim that on your actual expenses. Zero VAT means you're not charging that, but you're charging it at zero, but your expenses you can still claim. And often people who are exporting get refunds from SARS. So that's also why they want you to register. So it brings your cost of owning your company down. Okay, so that's what that's about. So they will, when you actually register for VAT, I mean, for import-export, they will ask you to actually register for VAT. Okay. I'm trying to remember, when last did we do one online? It's been a while, yeah. Yeah, but the client already had that, so we didn't see it. 'Cause I remember from the old forms we did it manually, you had to submit your VAT registration at the same time. So I don't think it'll be any different online. Cool. Yeah, we spoke about US a little bit earlier, but just to expand on that. Yes, it's necessary, not just necessary, it's compulsory. It's one of those punishable offences. SARS can, not so much SARS, they won't do it, but the Department of Labour can actually prosecute you. So you have to, if you're going to employ someone more than 21 hours a month, you have to register for UIF and then by extension, workman's compensation. Because what you're doing is you're cheating your staff out of sort of like retirement money, if you want to use it in that sense, like unemployment benefits. So they've been working with you for some time, now they're getting laid off, if the economy's bad, where do they get the money from? If your company can't afford it to pay them out or pay them something, that's where they get the money from, UIS. And if you don't register and you don't pay, you're essentially heading them back. So it's very, very crucial, and it's mandatory. You've got no choice. And then workman's comp obviously follows from that, because then if they're injured, if one of your staff are injured, simple example, we had a client, I might have told the story earlier in the year when we did the talk in February. We had a client in the mining industry, and he has to register for workman's comp, and he just didn't want to, because obviously in the mining industry, just construction work, the workman's comp fees are much higher. Like that's for an accountant, what's the worst that happens? We slip on the stairs or paper cut. But inside the construction industry, a painter's painting the side of the building, and it happens often. The painter steps back to look at the paint even, and they fall off the scaffold and they die. It happens a lot. That's why they're going to wear harnesses and stuff and harness themselves into the scaffolding. So we had this client, and he had to register for workman's comp. And he was like, I'm not doing it. I don't want to pay that 20,000 rand fee once a year for my staff. I said, you have to. So we already had all the details. We went ahead and registered. About a week later, he phoned and said, listen, about that registration, has it happened? I said, you said we shouldn't do it. So no, why are you asking? The mine supervisor that he hired was driving out to his mine in Rustenburg and was killed in a car accident. He would have had to pay huge, huge, huge sums of cash. And luckily, because we make sure all these things are done, he was fine. So, and that's what it's like. Paying the hospital bill, because now helicopters to go, fetch the car, fly him from the side of the road to a hospital here in Sandton, and he died on the operating table. All that cost. If he never had workman's compensation, his company would have had to actually pay it. And that can sink you. But because he had workman's comp, that actually pays it. Pays the whole thing. You got a private hospital, everything like that. So, important to have. Yeah. New registrations. Okay, this is a good one because it happens a lot. We register a company at CRTC. We've used our Gmail address because we don't all have our own like companies, own names. We swapped our SIM card because there's a better special at Cell C this month. The year passes and FTSE sends out an email and an SMS to you to remind you your annual returns are due. So what happens is, what annual returns are, every year that your business is open, you've got to pay a small fee to the government to tell them that you're open. I know it's daft, but that's how they're making money. I mean, it's like, why do I have to tell you I'm open? You can look at my tax returns, I'm open. I'm filing tax returns, surely I'm open. But so you pay another fee. If you don't pay the fee, they'll give you a warning for a year. The next year, they actually de-register your company. And people sometimes think, "Ah, so what? If that company owns assets and it gets de-registered, the assets forfeit to the state. You've lost them. That building, not yours anymore. But the other side of the coin is, if the company actually deregisters and you owe that, you know, cash flow problem, business is tough, your clients haven't paid you, probably mostly the local council, now you go bust. If the company deregisters, you as the owner become personally liable for those debts. They can come after you personally now. Yeah. So, important. Look at the annual return, it's a small fee, it's 50 Rand. But still, I mean, you know, so make sure your email address, your cell phone number with 50 is up to date. So if you're getting an SMS or you're getting like an email, we actually obviously with our clients, we check on these things all the time. And it'll happen just once a year that it comes through. So once it's actually deregistered, what happens? So sometimes it's still like in a pending phase, maybe up to year 3, maybe even year 4. It's still on FTSE's database. If you then pay the annual returns and a penalty of 150 Rand, they just activate it again. Then it's fine. Then it carries on. Now you've instead of paying 50 Rand, you pay 200 Rand to keep it active. But if it's actually gone, that actually deregistered the actual company, you can get it back. And what they generally do is only if it is still trading, so you've got a bank account that you can prove active funds in and out your bank account, or it owns an asset. Then you can prove that it owns an asset, like deed to office, a deed, there's an asset in the name, your vehicle, if it's a vehicle, that asset's in the name of the company. Then you pay a fee, it's about 400 Rand, not a headache. Just besides the 400 Rand, it's a fee. Whoever you work with, if you're doing it yourself, it's your time, but obviously if it's a pro like us, we charge a fee. And then you still got to pay all the outstanding annual returns as well. And then you get it activated again, then it's fine. Okay, so if you can actually fix it, that name stays on the database. So even if we go search a company data, we put your ID in and we search, we can pick up every single entity that you've ever been involved with. They can be deregistered, they can be closed, they can still be active. And what that then, if it's, yeah, you can't register a company with the same name again, only when it's actually deregistered completely off the system. Then, but the name still stays there. So you often find when you reserve a name even, and then you register, there's two names on the system. But one has no reference number next to it. The other one obviously has your company number. Okay, so yeah, that's the penalties they charge. Yeah. Okay, trust account. Who owns it? Okay, trusts are not loved at the government. The government doesn't love trusts. The Trusts Act, the tiny little act, it's about 42 pages. And it doesn't just administer trusts like interviewers or now I'm having a senior moment on the other testamentary and stuff like that. It also administers estate agents and law firms because they've got trust accounts too. But their trust account is slightly different in terms of you still have to register in Canada. But this question's tying into a trust. You register a trust at the master's office at the High Court. And generally a trust is where you want to keep long-term assets, a family home. So if you think about the in Gunyama Trust, that's registered at the High Court. And the beneficiaries, you get the trust deed, which you can get. It'll tell you who the trustees are, so people who administer the trust, and then who the beneficiaries are, people who get the benefit of the trust. So having a trust in that sense, where it's registered at the Master of the High Court, you then open a bank account, and that bank account will be a trust bank account. But, and law firms do this as well. Estate agents also have it. When you buy a property, I'll just get into the account now, but I'll just draw a line between the distance. Law firms and estate agents also have trust accounts. But those trust accounts are just a bank account. And what that does is, if money goes into that account, it's held in trust. It's not the law firm's money, it's not the estate agent's money. So often the estate agent will take your cash, hold it, and then pay the seller. So it stays in trust. So if something happens, maybe the estate agent dies or something happens, your money's safe in the trust account. There's insurances against it. If they steal your money, it's also, you actually get paid out. So all three of these trust accounts, so they don't need a trust at the Master of the High Court. And that's why I want to just draw that line. But the bank account, you've got to specify with the bank. This account is open under section, under the section, I don't have it off my top of my head, but it's opened under the auspices of that Trust Act. If you don't specify that, and often the banks don't, then it's not a proper trust account. Anyone to steal the money from there doesn't get covered under the laws, doesn't get covered, you won't get your money back, gone. So if you're ever buying a house, paying an attorney for something, ask them to show you under what auspices of a attorney's trust account held. Because a lot of attorneys also steal money. So yeah, that's the differentiator in terms of a trust with a bank account, and then obviously attorneys, estate agents, where they operate a bank account under the Trust Act. And it's a smaller act, like it's 40 pages. Yeah? In terms of what? Okay, I want to just draw a line. So if you register a trust at the Master's Office, the High Court, a trust can own shares in a company or own a company. And then then the company will have its own bank account because they're seen as individuals. A trust can also own a CC. So normally another entity can't own a CC, but the CC is seen as an individual. So like a company can't own a CC. But a trust can, where the beneficiaries of the trust are individuals. It goes back to sort of the abolition of slavery, where a person can't own another person. A company can't own another person. So that's why a company can't own a CC, because the CC is seen as a person. You see, so, and the trust has to be individuals, because then you can be a group of people, but it's not an entity owning a person. So yeah, so a trust as a master can own the CC or a company, and they'll have their own bank account. The company won't now have a trust bank account. Okay, but a company like a incorporated company, a law firm, a estate agent, they can have a trust account, like a bank account, trust account. Yeah. I purposely left this question as it was sent in. And the reason I did that was, what is a sure way to get on funding? There's no sure way. Unless it's your mom and dad. you that's for sure you're going to get funded. Yeah, and I don't mean to make light of that, but the sense is that people who've got money and they want to lend it, borrow money to small and medium enterprises, they want to return. The surest way to get funding for your enterprise, if you don't have
equity, you don't have all these things. Is enterprise and development. We spoke about it in our funding round because the objective of the funding is not the same as somebody who makes it's their job to lend money because they want interest, they want to earn money back. So very often on enterprise and development programs, the money is generally grants. It's not coming back. So they're looking for an objective. What is your objective? I'm going from nowhere to employing 15 people. I can support that because I want to see what the objective is. I'm not looking for any cash back. So that will be the surest way to use the term in the question to get funding without having assets, equity, and those things. Okay, so look out for those things. And the DTR government has grants. They got grants under the Cooperations Act. They got grants under solar now. They got a few grants at the DTR. But to meet the hurdle rate to get that grant, you can spend half the energy looking at EDSD programs and you'll get the grant quicker, faster, with fewer strings attached, and they'll pay you on time. So just, that's the only way it is. EDSD would be the way I'd go. It's the surest way, that's besides your folks. If your parents can give you the money, you'll get it without equity. But that's the one on that. This is also an interesting one. It comes up quite a few clients ask this. So when you buy an asset, so you buy yourself a vehicle, these are fairly simple examples. You buy yourself a vehicle and charge that you write it off over 5 years. So in your books, you buy it year one, it's worth 100,000 Rand. And then each year, 20,000 Rand gets sort of taken off the value of the vehicle. So by year 5, on your books it's worth 0. Because you wrote the vehicle off over 5 years through a tax, but that's a tax write-off. The vehicle's obviously still there. It's still working. It still has an economic value, but for tax purposes, it has 0 value now. So a lot of people wonder about that. They're like, but if I've written the vehicle off, now what? I don't mean that I wrote it off because I was drinking on the weekend. It's not that kind of write-off. different one. But it was purely a tax thing. And then what happens is when you sell it, when you sell the vehicle later, you'll get a thing called a profit on sale of assets. Because the vehicle still has value. So that 100,000 in vehicle in 5 years, you might still be able to sell for 50,000. So it has a value. And obviously when you now sell it, that becomes income in your company and you pay tax on it. So SARS never skips an opportunity to get tax from you, I'm afraid. They're watching all the time. But that's so what you'll often find is that companies where they've got high cash flow or high profits, when their assets reach the economic end of life, they'll then trade them in or sell them or do enterprise and development sort of grant them to staff as a gift or something like that and buy new assets. So then they can get the right off for tax again. So it's just very much a cash flow thing. Yeah. So I thought that was just an interesting way to answer that. So they can still be economically worthwhile. So just following through that, now assets are written off. Someone's had them as a business. Let's now go, a company's had them as a business, it's working still, they buy new stuff, and then if you just push the stuff out and say anyone who wants the vehicle or who wants the equipment because it's old can come and fetch it. If you part it away, it's yours. So the other side of the tax question now, I now go, I see this forklift that the company, Tonga Units is going to go into liquidation. The left, I take the forklift, I service it, and I now start a forklift rental business. Does that vehicle have a value for tax? So I can claim the deemed value. So if I, for example, go now, sell it into my now little business that I'm going to do forklift hire, If I go look for second-hand forklifts in the market and get a rough price, that thing's now worth 100,000. I bring 100,000 into my group of business as an asset, and I can write that off over a year. You see, so it's like one person's, one person's sort of end-of-life asset is my startup life asset. And if I'm that religious that I can claim the deemed back on that because they paid back for it originally. A little bit just technical on that, but um, as long as there's an economic life cycle, economic use, that asset can be repurposed throughout multiple companies. And it often happens with big trucks, like the big 18-wheeler trucks. Those things have got an economic life 20 years. They run all the time. So you often find guys are buying trucks that are 10 years old, 15 years old, and they're still on the road. And they're still, operating and things like that. Okay, before we dig into this one, questions so far that you're now thinking of asking that we weren't asked earlier. Ed, is anyone online? Anything from the guys online? Nothing.
None so far.
Excuse me, Ed?
No questions online.
Yeah, thanks. Cool. Last chance, anyone? Yeah, why do small businesses fail? Most common reason. Well, it's easier we just do an infographic. The most common reason is no market need. So you start a business in a place where nobody needs it. But why am I going to go there? It might be perfect. It might be, I'm trying to think of, I start a butchery inside a vegan sanctuary. Nah, it's not going to happen. There's no market need for it. It's a good business anywhere else. I'll make money. So that's often the biggest thing. We don't place our businesses where our clients are. So we need them to get there easier. It must be simple to get to them, easy to talk to them. Biggest reason for failure, like market fit. I can invent a beautiful car that runs on gas, but where do I get a petrol station to put in gas in my car? You can't. It's hard to do it. So beautiful concept, work really well. It's just going to make it hard. So it's got to fit. It's got to fit into what your clients are doing. Okay? And then let it run out of cash. One of our earlier talks when we spoke about cash flow, planning your budget, all of those fun things, that's why it was key. Because that's the second largest thing that kills your business. There's so many people who've actually gone bankrupt successfully. And I say it that way because they've got profits, which means they're a success. Yet they have to close their doors because they've run out of money. And they run out of money because their cash flow is bad. Their customers are paying in 90 days, yet their suppliers want their money cash. So unless you've got a big pile of money or an overdraft or something to carry you for the 90 days, you run out of cash. You're a successful business, but you failed. You got profits, but you failed. Yeah. Team, important. Very, very important. If you and your business partner are fighting all the time, or you and your staff are fighting all the time, you're in the same mindset, it's not going to work. Because customers won't be happy, the product won't work out well. So team, big time, team is important. Yeah? And then obviously knowing who else is in the market, competition. So if I open a pizza place, pizzas are easy. Open a Shisanyama, easy. Easy, easy, easy. They can be on the same street, there could be 3 or 4. What was going to make mine better? It might not just be better price. Is it, if I've got tablecloths on my table, so I'll give you a free car wash while you're eating. Competition. Understand who you're actually fighting against. Like the Sharks, they underestimated the Bulls. They didn't outplayed. That's what we need to do. Understand your market, who you're playing against. Okay. Obviously pricing. You see where all the talks in earlier with cash flow, perhaps it. How many of them are lining up inside here to understand that? Pricing is the thing, but pricing can also be what helps you. You know, the same factory that makes the iPhone makes the Huawei phone. The iPhone's 18,000 rand, the Huawei phone's 4 grand. The same factory. But people want to aspire and I want to say I'm the only hope of the new iPhone 23 or whatever it is. So depending on your product, higher pricing makes sense. People will buy into it. So just look at where you targeting. I was going to now use the example of bread, but so that also works in that industry. I can buy bread for 11 rand at the shop, Tesco, but I can also go to the little artisan bakery on the corner and buy the same loaf of bread for about 55 rand. So it just depends. Understand your market. So if you don't get your pricing right and your costing, you're going to go under. Yeah. It's funny enough, the physical price of something is generally not what actually concerns most of the clients. And a perfect example is like, we all entrepreneurs here. We've all run our little companies. We're all doing our thing. When we want to buy something, and tell me if I'm wrong, when we want to buy something, I'm thinking I want to buy myself another, laptop. I think I can afford about 10 grand. I need these specs. I can afford about 10 grand. When I start looking and I see the first laptop that meets the specs and it's about 10 grand, I buy it, And the same with anything. But had I gone and spent a week researching online, looking, I could have bought the same laptop for 6 grand. You see, the price itself is often not the same. Is it easily available? Convenient? I'll pay for it. So really in my head I've got a budget that I'm thinking of. If it's slightly more price than the next thing, but it comes with accessories. So using the phone example, if it comes with earbuds, a charger, Spotify for a year, music, the value is more than the phone that's actually less. So price is really one of the things people look for value. Doesn't mean the value I'm after. Not the physical price on the price tag, you see. And that value can even just be, I want a polo shirt because I think it's flash, but the shirt I wore yesterday is made from the same material, old khaki, and it costs half the price. But it's exactly the same shirt. Same 100% cotton, everything like that. So it's value. People want value. So my status is up this morning because I've got the polo shirt on. I feel better. I feel thinner in my shirt. Aspirational sort of pricing. Okay. So as you go down, obviously, like one of the big things, like a lot of people don't actually understand, and Michael Gordon from S&B days, he actually mentioned this in a talk. Sometimes being too early is the same as being wrong. Yeah. Sometimes being too early is the same as being wrong. So you can build houses thinking people are going to, the suburb is going to extend out in a certain way, and you preemptively build houses, but there's no transport yet to get people to work and back. That's a bust. You're too early. If you waited 5 years, that investment would have been way, way easier. We put Pastel in the cloud in 2007. We had our own service. We were in the cloud in 2007. Long before cloud was a thing, when we told people, no, but you can go to the cloud. looked out the window and like, what's he talking about? Where's the country? They don't know what I'm talking about. The cloud. We were 10 years far too early. We wasted a lot of money. So, and turned out we were wrong. Everyone's in the cloud now. But 10 years, and like in 2007, it was way too early. So, yeah, mistimed too early is the same as being wrong. Yeah. If you've got investors, important to make sure they're investors. There's got to be a clear line. Business partner who puts money in different to an investor. Investor puts the money and then I shut up now. Unless they're investing because like if I have a bakery, I'm making bread and my investor is Raymond Ackerman and he says when you make bread it's going to go into all my pick and pays, I'm listening to it. But if it's some other guy who just puts the money in and he wants to tell me, no, but these are the ingredients, are you a baker? Then shut up. I'm the baker. I'll make the bread. So if your investor tries to run your business and your team, just understand where your funders, investors, where they're fitted. Business partners obviously different, and you want partners who have strengths, not just money. What else can they do? If they give it good with marketing, let them go actually do the marketing side. You do the operations, things like that. So yeah, these are generally why companies fail. I'm very surprised that one's at the bottom. Lack of passion. A lot of people start a business thinking that it's quick, it's easy, and they run out of passion long before they run out of money or any of those other things. Because I think what's lower down there is this is scaled on people who actually run a business. But the number of people who thought of running a business have already failed because they never even took the next step to do the market research, do the budget. And like, I'll have a job. This is like far too much work. So that's who we are with those. You got a question, yeah?
Hi, Ed was asking, what is a cheap and quick way to get feedback on your products to pivot quickly?
Yeah, the cheapest way to get info on your product. Talk to a physical person. Don't do a market survey. Don't Google, will people love fishing nets? The people you want to sell to, go talk to those people. They'll tell you immediately, yes, I like what you're doing, but the net is too thick or the pole is too flimsy or whatever. Talk to the people you want to sell your product to. So Ed, does that help? So the quick and short, like feedback loop. So we do it in our firm. Often people will like email, they want a quote for their accounting, for a tax return or something like that. So we quote them, we don't hear from them. We quote the first time, leave it a week, we email them again, are you solicited? Third time, our phone and go, why didn't you actually take up our service? And generally what happens is, A, it costs more than what they thought it would be, so they don't have the cash to do it. B, the person who explained the service to them never came across competent enough, so they were not uncertain whether we had the skills or competency to do the work that they were asking for. And thirdly, timing. Their cash flow, they were just checking out the market, and their timing and cash flow, they can't do it now, it's something they want to do in the future. So talk to the people who are buying your product. That'll be the shortest way to get feedback on on what you do. And too often, especially now in this newer generation where we want to just text, it's too easy to ignore a text or to just tell anyone anything. Physically talk to someone because you can tell in their body language, you can tell in their voice what they're saying. And you can find out easy, quick what it is and stuff like that. But if you send them a text, oh, why not interested, thank you. And I'll opt out of your newsletter. Okay, cool. Right. Question?
One of our ladies, she got one pay and the lack of testing. How do you advise someone who has a foreign club and they is she rested one has this present accidentally or to going wrong. Then they that lack of patience immediately to the even lose his position. What is the fallback ground that is that position? They feel them.
There are a few of those. There's a few of those that have come into play. So in the accounting industry is key. There are a lot of youngsters who go to varsity, do the BCom, go do the honors, then they become CAs. You know how many CAs like to audit? Not one. Not one that I've met. CAs that actually want to audit. The regulations, the blowback, the issues, the clients crying about price. So few CAs want to audit. So what do? They pivot to the accounting firm now with the new Companies Act. I don't have to audit. I can still do accounting, which I love. I can still talk to people. I can still do all this stuff. And my clients don't have to be audited. Happy to. So they pivot it like that. So it could be, I'm a chef. Well, I think I like to cook well. Just like my mom told me I'm special, so I think I can cook well. Open a restaurant. Turns out the other people are truthful that I really can't cook. I'm cut. So how do I pivot? But I'm good with people. I hire a chef. Now I'm front of house. I can talk shit to them. I can get them drinks, take some food out of the kitchen. They're happy. I'm making money. You see, so there are a number of those, and too often people throw their arms up before they have time to think about it. So, okay. But that's where the saying of like, follow what you love. So in the auditor's case, it'd be a case of, yeah, I like the numbers. I like to look at numbers, analyze numbers. But hell, I don't want to do all the laws and the regulations. So they don't really know the part they love. So if they understood that, they just stopped at BCom and just become an accountant for the bit they loved and not the audit and wasted another 4 years. You see, it's like that. Yeah, does that help? Perfect. Anyone else? Mr. Brown?
Yeah. Hello?
Yeah.
We are Ed again. Should you change your prices for customers that are price sensitive? Just walk away and add more bells and whistles, make it more appealing.
Okay, so that is quite an interesting question. You don't want to be chopping and changing your pricing because it's actually, it makes all your client, what makes you uncertain about your business. So what you need to do is know the value of what you're selling and what your margin is. So if you know what your margin is, you make 100% markup, whatever, and someone comes in, I know it's going to take me an hour to do your tax return. So I know that's going to cost 1,200 rand. You come to me and you say, I can't afford 1,000 rand. Can you do my tax return for 600 rand? No, no. And I can't afford it. I can still help. I can still help that person. Okay. Can you pay me in 3 installments or in 4 installments? You pay me 300 rand a month for 4 months. I've still got my 1,200 rand and they've got the tax return. So just break it up. Think about where it's going to be. Because imagine you're at the shop and you go to pick and pay and you get to the 12. Can I get a discount on this? Can I get a, it's not going to work that way. But the same thing is with that person with the actual tax return says, myself and my family want to come here. Now there's 10 actual tax returns. That's a whole day's work. Yes, I can do it for 1,000 rand. Because I'm sitting, doing one after the other. Easy. And then I can obviously give them a discount. But if you remember from one of our earlier talks, when you give us the discount, don't now invoice the client, tax return, 1,000 rand. Because when that client tells their friend and goes, and they say, talk to these guys, look, they charge me just 1,000 rand to do my tax return. No. The invoice must say 1,200 rand, 20% discount. So yes, they're paying 1,000, But they must know the value of that product is 1,200 rand. It's crucial. It's crucial. Because often you think, oh, I'll give a person a discount. You give them a cheaper price because you've been chatting with them. You see they can't afford. Then if they don't know you're going to drop the price, they're going to ask you for a discount. And now you feel bad, so you give another discount and now suddenly you're not making any money. Yeah, so it's quite important. Don't chop and change your price. If you're finding you've priced yourself out of your market, if you're paying attention, you priced out of the market, you haven't done your sort of your business plan right. You haven't looked at your market, your target market, who you're pricing for. So you probably have a mismatch. You probably have a mismatch on your product and things like that. And then yes, then go reevaluate and change your prices accordingly. So yes, true. So the thing is, often entrepreneurs, but it's not just in the public and procurement. Very often entrepreneurs underprice themselves. They feel their only bargaining chip is price. Because I'm small, I'm little. Therefore, I'll make a cheap price, and invariably you're going to go like you'll go out of book for business. The reason, and there are circumstances, obviously, you've got fewer costs than a large company. So yes, you do have more space to change your pricing. But just in that space, so female-owned companies, we work with a lot of female-owned companies, they underprice themselves consistently. Women-owned companies are always 20% less on price on average than a male-owned company in exactly the same industry, and they have a very little more skills than we have. They kick our some skills, yet we sell higher price. And the only difference is exactly that. So often, and an example with a client that I actually mentored, they're in the tech space. They go for like to go see clients. The same client as the big guys like SAP and all of them. They go see clients, and they're talking to like the tech manager, and obviously IT, most of them are like of the tech people are men. So they're talking to the manager, the guy, and he goes, off the top of your head, how much do you think this project would be? And straight away, because the women and companies don't have numbers like at the top of the head, you haven't done that. What is my cost of running my business thing? Well, you know, it's 4 days. I need it roughly to keep my doors open 1,000 rand a day. You can say, oh, that should be 5,500 roughly. Give or take, we have to scope creep a little bit, but you're looking at about 5,500. Okay, well, let me get back and work it out, because I don't see. And then you go like, shit, he's asking for price. So you go and you mark it down, like, okay, I'll give him a discount, that's 4,000 rand. And he goes, cool. We want to move it up to 8 days. Can you give us like a discount on that? 20% off that. You know, I've already given him a 20% discount. Now I'm going to give them another 20%. That's my margin. I'm dead. Where the male-owned businesses, because we often numbers are a little bit easier. And then that thing, the person says, roughly, what do you think? "Oh, roughly it's about 6, 7. So now when I get back to office, then you said that I'll give you a quote. When I get back to office, I'll work it out, send you a quote. Now when I send them a quote of 5.5, he's like, oh, for them that's 6, 7, that's approved, done. And that's weird. And I'll work with the female-owned companies and show them exactly, work out your cost of business. What do you need every day to keep your doors open? And then they started signing a lot more business. So you just, and it doesn't have to be accurate. You just have a ballpark and go, and that's what you'd want to do when you do the custom and procurement. What would, if I'm going to go do work that would be Wilson Daily Homes or Food 5, what would they quote on this? It's not going to be to build a road 800,000 rand a kilometer. It's going to be 2 bar a kilometer. So where do I come in? If you price yourself too low and say it's going to be 700 rand or 700,000, me as the person who's going to approve the quote is going to go, I know that should cost at least 1 million. If you're coming in under that, it means you're going to cut corners, you're not going to win the work anyway. But if you come in at 1.5 and they are coming in at 2, that's reasonable. Like, okay, they're smaller company, lower cost, okay, they'll be able to buy all the material they need, likely to be approved. See, that's why it's important to know your numbers. Yeah, does that help with the question? Yeah. Cool.
Pardon?
Is it possible to become an investor of a company that you're working for? Yes. Often, a lot of investors start like that. I've got a cousin who's got a very big auditing and accounting firm down the road, and he was one of those auditors who went, but he loves auditing, so he's a freak. And he did his articles, and while he was doing his articles, he went back to varsity and studied law. So he got a law degree as well. He owns a company where he did his articles at. He bought the founders out over time because he had the rare thing of being a lawyer and an accountant. So, and you don't find that. It's quite rare. So he ended up buying the company. But a lot of times, employees can buy the company, especially nowadays where people give stock options and they give equity. So employees can, over time, like actually buy the company. So maybe you work in a company, you love it, you bought some Bitcoin early, now it's done well, not so much now, but now when it was doing well, that's $40,000 a coin, your boss was struggling, you loaned him some money, but you took shares and now you own the company. So yeah, it does happen, so you can do it. Yeah, cool. Anything else? Anyone? Yeah. Very important. You know, learn on this. Entrepreneurship is hard. It's very hard. So look at the website, our partners. You got questions, reach out. Often you think that what you're going through, you're the only one ever in the history who had a cash flow problem, or a pricing problem, or a procurement problem, or none of that stuff is new. None of that stuff hasn't been seen in us in the past. We're here to help, reach out, you know. A lot of the stuff is like these things, it's free, okay. So you're not alone. Find a group of people on a journey with you, chat with them. So you might be in the construction game, your friend owns a restaurant or something like that, or you go through similar problems. Cash flow is one, finding your market, getting your pricing, chat with them. Makes this trip a lot easier. A hell of a lot easier. Okay. Thanks everyone. I appreciate it. Next month we're coming through, we do our end of year. What do you think of when the year is over? If the year is coming to a rapid close, I know for a lot of small businesses, you don't close down, but you want to get time off, eh? December must be here already. So we wanted our talk is about that, what you think about in your business, what possible things you can put in place, you know, we're on the road, have you got a will, have you got insurance, things like that to just sort of run into the end of the year with a clear mind and then set yourself to start in the next year. Okay. So that's quite key. So that's what we're going to be doing next month. All right. Cool. Thank you, everyone. Appreciate it. Guys online, thank you. Thank you very much. Okay. Ciao.